That's right, Phil. We head off to Japan, whose economy is in need of help. And Prime Minister Yoshihiko Noda is expected to announce an economic stimulus package soon. Now, Mike Firn is in Tokyo. He joins us live tonight with more. Mike, what can you tell us?
Well, we just had economic figures released, a whole bunch of them in the past couple of hours, and they weren't as bad as economists forecast. The jobless rate unchanged, 4.2%. There was one fewer job per 100 applicants than the previous month, 80 per 100. Household spending slid a little bit down, 0.1%, but the forecast was a drop of nearly 1%. And deflation actually on hold for 1 month, excluding volatile fresh food prices, national CPI flat in September. However, we did have October figures for Tokyo, a leading indicator down 0.5%, deflation looking likely to continue, and actually fighting falling prices, one of the campaigning pledges of the main opposition party, the LDP. A lot of issues could decide the result of the lower house election on December 16th, energy policy and the future of nuclear power. Whether it's wise to cut pensions and raise taxes when retail sales are falling, what role Japan should play in the world and the region. But politicians may be wise to heed some watchwords from a US election 20 years ago. It's the economy, stupid. The Organisation for Economic Cooperation and Development halved its Japan forecast this week, saying GDP will grow 0.7% next year, 0.8% in 2014. The government's trying to get out of recession with another supplementary budget, the second in 2 months, double the size of the last one. Announcing more economic stimulus just 2.5 weeks before an election and promising more afterwards can only lead to accusations of vote buying. But some economists say that Noda's attempt to boost the economy with fiscal stimulus is better than Shinzo Abe's obsession with monetary policy, trying to push the Bank of Japan to adopt inflation targets of 2 to 3%.
Even if BOJ sets the inflation target at 3%, then they will ask the BOJ, so what can you do to achieve 3% inflation target? So the announcement itself is not enough. The transaction must follow.
Others argue that government spending and looser central bank policy can only help if politicians address Japan's fundamental problems: skills shortages, inefficient rural economies, a shrinking working population.
Monetary policy can handle interest rate and money supply. But Japan is facing with structural problem. What is the heaviest structural problem? It's an aging population.
Professor Yoshino says the next government should also push the private sector to do more, because that will help ensure projects are more focused and more efficient. The government just halted plans to spend money that was earmarked for earthquake reconstruction in the northeast, after admitting the cash was really going to projects including the annual whale hunt and road building on the southern island of Okinawa. We also had industrial production figures out in the past couple of hours, and a surprise rise month on month, up 1.8% from September. Year on year, though, still down 4.3%. And we did see a big shift amongst the automakers, their domestic production falling 12%, overseas production rising 15%. One way they're trying to deal with the strong yen against the dollar and the euro.
And Mike, you talked about the new budget. How will the government fund its extra budget?
This is a big concern, obviously, with the debt to GDP ratio around 230% and rising. But the government says it won't be issuing new debt this time. It's using reserves from the existing budget, which it did the previous month. Quite interesting, really, because it was saying a month ago we're facing our own fiscal cliff. Unless the opposition approves our deficit financing bonds, then we won't be able to pay for anything. We're going to run out of money. And then they keep finding all these extra reserves. But they are promising, if they stay in power, which is a very big if, another supplementary budget, but that one will have to come from the following fiscal year's budget.
Thank you so much for joining us tonight.